Hey everyone, this is Patrick from EasyFX Code Trading System, and this is Saturday, the 29th of January 2022, and this is the weekly technical analysis for spot gold and dollar yen for the first week of February. And let's begin with spot gold, where you can see a drastic fall over the last 3 days, triggered by the Federal Reserve and their hawkish stance on their potential rate hike in March and ending their QE in March as well. So this triggered the US dollar higher and a fall for the other majors, and the spot gold especially fell through the supposedly support in the first support, and then the second support at the daily 200 EMA, right near the key 1800 round figure level at 38 pip retracement, and then closed below that on Thursday, and then fell through to test the swing low area that we had marked earlier, and did manage to bounce back up a bit on the Friday. So, but it has already broken below the critical support and the lower channel trend line as well. It did test higher on Tuesday with the touch of the upper channel trend line, and fell back below the 78.6 pip retracement area, and also round figure at 1850. So that was a major resistance area. Did not manage to reach this critical resistance zone, but yeah, the upper channel trend line was the limit, and then fell below that. So this week there could be further bearish momentum if the US dollar is going to continue strengthening, and if this drops through the 21 pip retracement, then it could very well test this lower trend line of the symmetrical triangle on the larger time frame, and perhaps test this swing low as well. All right, let's take a look on the weekly time frame. And that's a very bearish engulfing candle there. And with the break of the lower trend line, so there could be some more bearish momentum to drop lower to test this lower trend line. And the swing low at the 1751.15. So that's going to be a critical area of support. So now let's mark this as our first support level. And then this will be the next critical support zone. And let's also add a round figure at 1750. Which is all there as well. And let's bring this resistance zone down. Looks like this is going to be the resistance at the 1800 and the daily 200 here. So let's remove this level here now. So this is also resistance zone, which is still holding, but we can remove that for now. Okay, and the Federal Reserve did announce that they would likely be looking at a possible rate hike in March to temper the rising inflation and the high inflation, and also end the QE in March as well. So that alert was triggered as an hawkish mood and a hawkish move, and that's why it triggered the US dollar higher, which we'll take a look in a while. And there are some more news this coming week as well, culminating with the non-farm payroll report on Friday. So that could trigger some moves in the US dollar. You'll see the US dollar index now, the DXY, where on Wednesday's announcement from the Federal Reserve that pushed it through the 162 FIB extension level, and then right through the recent highs at the 96.86 area, and right through to hit the 200 FIB extension. And pause there on Friday. So this is now going to be support. These levels are all support here. And let's see on the weekly time frame how far it can go. If it's going to continue its bullish momentum, there is a swing high wick up here. 782. And let's also mark a round figure at 98 here. Then if we also draw a reversal FIB extension, this swing high lines with the 138 FIB extension, so that's a potential resistance zone first, close to the 9800 round figure. Let's go back to the daily time frame and mark this zone here. So that will be our resistance zone. Okay, if it does dip below the support, there is still significant support at the 786 or the 21 FIB retracement of this swing move. Or rather the 786 retracement of this swing move down, going back up. So could add an additional support just in case. And resistance at the 138 or even right to the 9800. Okay, let's move back to spot gold. So we'll see whether this resistance will hold and whether this support will hold critically. If not, then it's likely going to test this lower trend line. If it does recover, then it could recover just to test the 50 fib and the lower channel trend line that it fell from before possibly further bearish move. Okay, so we'll watch out for that in negative correlation with the US dollar. Let's move on to dollar yen, where, as you would expect, the dollar yen has also pushed up higher from the Wednesday and reached the resistance zone that we had identified. And that's right at the 21 fib retracement area, back up there. We'll see if it's going to go back up higher. If it does, then we'll need to flip this around. See how far it will continue, but for now, this is support for now, and this will be the immediate resistance at this recent swing high. We can move this support up here to the 00 and the 38 fib retracement. So for now, this is still a resistance zone here. So it did find support at this swing low from the previous week and tested it before bouncing back up to test the resistance zone. Let's take a look on the weekly time frame. Yes, it could try to pull back first and then bounce to test the swing high. May not be able to break through much higher, so it depends on the US dollar strength. Okay, so we can also add a 116 round figure. $16.00 here with the 115 area as support, along with the 38 fib retracement. Okay. So we'll see where the US dollar is going to continue for next week. And there's a number of central bank announcements next week with the ECB, Bank of England, and the RBA all announcing next week after the Federal Reserve from last week. So dollar yen should find some support and then attempt to break out higher. And that's going to be a key resistance zone. If it does dip lower, there is still support from the 50 fib. And which means that it may not be able to break out higher yet and just consolidate within this zone. Okay, so do check out my other videos on the other major pairs. Have a safe week and good trading week, and cheers for now.